You think you understand Bitcoin because you can read a chart. You think you understand investing because you have an app. But right now, as Bitcoin sits at $80,451, you're missing the same pattern that destroyed Roman fortunes 2,000 years ago. And the man who predicted it was a slave. Every day, millions of investors wake up and do the exact same thing. They check their phones. They see green numbers. They feel smart. They see red numbers. They panic. Right now, with the S&P up almost 1% and the Nasdaq climbing over 1.5%, you're probably feeling pretty good about yourself. Bitcoin's up. Tech stocks are rallying. Even the VIX is sitting calm at 17. Everything looks fine. But here's what's really happening. While you're celebrating those modest gains, you're being programmed. Every notification, every price alert, every breaking news story about crypto's next big move is rewiring your brain to react instead of respond, to chase instead of choose, to follow the crowd instead of following principles that have created real wealth for over 2 millennia. Look at today's trending stocks. Micron up over 15%. Intel up nearly 14%. AMD climbing 11%. Everyone's rushing toward the same shiny objects, making the same emotional decisions, falling into the same traps that have destroyed more wealth than wars, more fortunes than famines. And they're doing it with the confidence of someone who thinks technology changes human nature. It doesn't. The Romans had their own version of FOMO. They had their own market manias. They had their own get-rich-quick schemes that left thousands broken. And in the middle of all that chaos, there was a man who saw through it all. His name was Epictetus. He was born a slave, died free, and understood something about human behavior and wealth that most investors today have completely forgotten. Epictetus said, "It's not what happens to you, but how you react to it that matters." Simple words, but when you apply them to investing, to crypto, to the decisions you're making right now with your money, they become revolutionary. Because while everyone else is reacting to Bitcoin's price movements, to breaking news, to whatever the market throws at them, the Stoic investor has learned to respond from a place of principle, not panic. Think about this. Ancient Rome had no internet, no smartphones, no real-time price feeds. But they had the same human emotions driving their financial decisions. Fear, greed, hope, despair. The same psychological patterns that make someone buy Bitcoin at $60,000 because it's going to the moon, then sell it at $30,000 because it's going to zero. The same emotional roller coaster that turns investing into gambling, wealth building into wealth destroying. Epictetus understood that the problem isn't the market. The problem isn't the volatility. The problem isn't even the uncertainty. The problem is that most people have never learned to separate what they can control from what they cannot control. And that ignorance costs them everything. Here's what you need to understand about Bitcoin, about crypto, about building real wealth in any market. The price action you see on your screen right now, Bitcoin at $80,451, up just over 1%. That's not the real story. The real story is happening inside your head. It's the voice that tells you to buy more when everyone else is buying. The voice that whispers about missing out when prices are rising. The voice that screams about cutting losses when markets turn red. That voice has been destroying investors for thousands of years. And until you learn to master it, you'll keep making the same mistakes that broke fortunes in ancient Rome and continue breaking them today. The market doesn't care about your feelings. Bitcoin doesn't care about your timeline. Your portfolio doesn't care about your rent payment. This is the first lesson every Stoic investor must learn. But here's what you can control. Here's what Epictetus taught that applies directly to your investing strategy today. You can control your preparation. You can control your process. You can control your principles. And when you master those three things, something remarkable happens. The market stops controlling you. Let me show you how this works in practice. Right now, as I'm speaking, someone is looking at today's market data and making decisions based on emotion. They see the Nasdaq up 71%, and they think it's time to buy more tech stocks. They see Bitcoin's modest gain, and they either feel disappointed it's not higher or worried they should have bought more yesterday. They're letting the market's daily movements dictate their long-term strategy. The Stoic investor sees the same data and asks different questions. Not, how do I feel about these numbers? But how do these numbers fit into my long-term plan? Not, what should I do right now? But, what would I do if I couldn't check prices for the next 5 years? Not, how can I maximize my gains this week, but how can I minimize my regrets over the next decade? This shift in questioning changes everything, because when you stop trying to predict what Bitcoin will do tomorrow and start preparing for what you'll do regardless of what Bitcoin does tomorrow, you're no longer gambling. You're investing. You're no longer reacting to the market. You're responding with intention. Epictetus called this the discipline of desire. Stop wanting what you cannot have. Stop fearing what you cannot prevent. Start focusing on what you can actually influence. Your asset allocation, your risk management, your time horizon, your education, your emotional discipline. Here's the framework that separates Stoic investors from everyone else. First, accept that you cannot control prices, but you can control your purchases. You cannot control market timing, but you can control your time in the market. You cannot control volatility, but you can control your response to volatility. Second, prepare for every scenario without predicting any scenario. The Stoic investor doesn't try to guess if Bitcoin will hit $100, 0, 0, 0, or $50, 0, 0, 0 next. Instead, they build a strategy that works in both scenarios. They position themselves to benefit from being right without being destroyed by being wrong. Third, measure success by process, not by performance. Your neighbors might be bragging about their crypto gains this month, but the Stoic investor knows that short-term performance is mostly luck. Long-term wealth is built on consistent application of sound principles, not on hitting the lottery with the right trade at the right time. This is how you build anti-fragile wealth. This is how you survive and thrive through every market cycle, every crypto winter, every bubble and crash. Not by predicting the future, but by preparing for uncertainty. Not by reacting to news, but by responding with wisdom. The ancient Romans who followed these principles built fortunes that lasted generations. The ones who chased the latest opportunities, who let emotions drive their decisions, who thought they could outsmart markets they didn't understand, they lost everything, and nothing has changed. The technology is different. The assets are different. The human nature driving the decisions is exactly the same. So as you watch Bitcoin climb toward whatever level it reaches next, as you see those tech stocks rally, as you feel that familiar pull to do something, anything, to capitalize on market movements, remember what Epictetus taught. Your wealth isn't determined by market performance. It's determined by your performance in the market. And that's something you can actually control. The markets will do what markets do. Bitcoin will be volatile. Stocks will rise and fall. Crypto will create millionaires and destroy fortunes, often the same people in the same year. But through it all, the Stoic investor remains calm, prepared, and focused on what actually matters. Building real wealth based on timeless principles, not chasing temporary profits based on temporary emotions. Most investors already know this is happening. Do you?